Hello aspirants, welcome to Vishnu IAS Academy. Hope you're all doing well. So with best wishes from Vishnu IAS Academy, today we are going to talk about 3 more important policies of the government that are in news today, okay, which will be highly beneficial for your upcoming UPSC preliminary examinations. Those 3 are, first one is NPS Vatsalya Yojana, okay, which is a pension related scheme for minors exclusively, and also PM Mudra Yojana, and finally Stand Up India scheme. Okay, we'll be talking about when these are introduced. Okay, so what are the main aims and objectives of these schemes? Okay, what are the government targets that have been set up, and what are, at the end of the day, how did the benefits reap all the benefits from these schemes? And also the achievements of these schemes will be seen in quite detailed manner for you people. Okay, so without wasting much of our time, let's get directly into the topic. And before that, please don't forget to like, share and subscribe to Vishnu IAS Academy for more these kind of videos, as well as drop your valuable suggestions, doubts, etc. kind of things in the comment section. Okay, thank you. So now let's see. The first scheme over here is pension scheme for minors, which is said to be NPS Vatsalya Yojana. Okay, so that is National Pension System Vatsalya Yojana. This is the first of its kind that has been introduced in India. Okay, so this has been introduced very recently in the budget session of 24-25. Okay, and this scheme has been announced on July 23rd, 2024. This scheme has been announced on July 23rd in the year 2024. Okay, National Pension System Vatsalya Yojana, and this is exclusively for minors. Okay, if we see the purpose, what is the purpose of this? Encouraging early savings for children, okay, by allowing them to open National Pension System accounts. Okay, in order to secure the future of this younger generation, and as well as provide intergenerational equity, okay, and also to foster or to develop that, cultivate that habit of savings in the children from this early phase itself. Okay, so this scheme has been introduced by the government in the budgetary session of 23, 24 and 25. Okay, and now if you see, it is regulated by the Pension Fund Regulatory Authority of India. This scheme is regulated by the Pension Fund Regulatory and Development Authority of India. Okay, which comes under the Ministry of Finance. Remember this. Okay, now what is the eligibility? All the minor citizens till they attain the age of 18 years are eligible for this scheme. Okay, and now the peculiar feature of this scheme is the issuance of PRAN. This is a card. Okay, the full form of this card is, it is a unique permanent retirement account number. Just like the permanent account number, just like the PAN card, there is a card known as permanent retirement account number will be issued in the minor's name. Okay, on whose name the account is opened. Clear? And now what is the aim of this? In order to create a pension society, as well as encourage the children to cultivate the habit of saving from now itself, as well as to secure the future of this generation, this scheme has been designed. Clear? And now let's see the salient features of this feature coming directly into this. It is a contributory pension scheme. Okay, so here which means both the employee as well as the employer will be contributing each other for this fund, which will be used solely by the employee in the future. So that means it is a contributory pension scheme. Okay, which you might have understood. And this account is operated by the, who will be operating this account? As the child is a minor, the guardian will be the sole operator of the account. The guardian may be either biological guardian or a legal guardian. Okay, both are eligible. And now, and the beautification or the peculiarness of this scheme is that it is available even to non-residents of India or overseas citizen of India as well. Okay, and for that, they will be requiring a separate kind of account known as NRE account or NRO bank account. Okay, non-resident normal account. Okay, NRO means non-resident normal account. For those non-residents of India as well as overseas citizens of India, they are supposed to have a special type of account in order to get benefits out of this NPS Vatsalya Yojana. So those are nothing but those accounts are said to be NRE accounts or NRO accounts. Okay, both are non-residents external accounts and non-residents ordinary accounts. This stands for external, E here, and here it is ordinary. Okay, so in this external, these type of special accounts are supposed to be opened by them. Okay, and the guardian automatically, he becomes the nominee. Okay, eliminating the need for the establishment of a special nomination for this account. Clear? And now, what will be the withdrawal or the exit scheme? Exit conditions in this particular scheme are that, you know, lock-in period is 3 whole years. Okay, in which lock-in period is a stand-up period of the account in which you cannot withdraw even a single penny out of this. Okay, so that lock-in period is supposed to be whole 3 years. So now, once the 3 years has been completed, now 25% of your investment can be withdrawn and can be used, and that too, it can be withdrawn only for special purposes, for either educational purpose of the minor child, okay, or for the treatment of any specific illness, okay, and also for disability if the child is disabled. In these 3 circumstances, after the completion of 3 years, 25% of your investment can be withdrawn. Okay, and next, a person or the child can exit from this once he attains 18 years of age, or if he chooses, he can continue in the scheme also. Choice will be left to the person itself, account holder. Okay, and now, if the corpus or the money in the account exceeds 2.5 lakh, okay, so out of this, if it exceeds 2.5 lakh, 80% is used to purchase an annuity and 20% can be withdrawn as a lump sum. Okay, in case if the person saves 2.5 lakh in this whole 3 years, in that condition, in this 100% condition, 80%, okay, is used to purchase any annuity. So in this case, 80% is used as annuity, in which, you know, annuity means the specific amount, okay, that can be received on monthly basis by this pensioner. Okay, and 20% can be withdrawn as a lump sum, and remaining 20% he can withdraw from it. Okay, and the remaining 80% will be saved in his account to give him on monthly basis. Clear? That is said to be annuity over here. And now, what happens upon the death of the minor child? The entire corpus will be given to the nominee itself, who is none other than the guardian. Isn't that so? And now, if there are any grievances that have arisen out of this scheme, even there is a grievance redressal mechanism and an organization provided for that, which is nothing but the PFRDA. Okay, itself. Okay, here, you know, the subscriber can come up with all his grievances, which will be redressed over here. Okay, so grievances, and these grievances will be redressed according to the regulations of 2015, okay, that have been notified under the grievances redressal. Clear? And now, central grievance, there is a special organization called as, or a platform, online platform known as, remember this, Central Grievance Management System. Central Grievance Management System. Okay, with this name, an online platform has been created in which the subscriber can directly go into this and lodge a complaint, so that their complaint will be taken care of by this organization itself. Okay, which will be coming under the National Pension System account. Is it okay? And now contribution and the premium details. Now we have seen the aims and objectives, okay, and now we are going to see about the contribution as well as the premium details. So account opening contribution, okay, in this a minimum of rupees 1000 is required to open the account with no upper limit. Clear? Finally, first of all, the initial step is that account name should be in the minor. Okay, in the minor name, the account should be opened, and in that, you know, the initial contribution should be rupees 1000 should be deposited in the account of this minor, and later on, subsequently, per month, rupees 1000, at least a minimum of rupees 1000 is supposed to be deposited in the name of the accounts holder, and as well as there is no upper limit. You can, your contribution can range from rupees 1000 to anywhere, any value, based on your economic situation, based on the economic situation of that account holder, okay? But a minimum of 1000 rupees is a must on monthly basis. Okay? And then account will be frozen in case there are no premiums added into the account, okay, but it won't be closed. When will the account be closed? Only if the subscriber, okay, pleads or requests for the closure of this account only, then only the account will be closed, or else it will be in the freezed form or operating or active form. If the payments are done on monthly basis, it will be active, or else the account will be frozen. But the closure will be done only upon the request of the subscriber. Clear? These are the terms and conditions of the contribution and as well as the premium details as well as regarding the closure of the account. Clear? So is it okay for you? Now let's go to the second scheme, that is PM Mudra Yojana. Okay, so this Mudra Yojana is a very, very important scheme, okay, which is responsible for the upliftment of the marginalized, vulnerable and those sections of the population who are socially and economically backward, okay, and those who are ambitious of coming into the business sector, but those who lack the resources. Clear? These are the kind of people that have been identified, targeted and identified by the government, and these people will be provided with loans directly from the government itself in order to carry their small and micro businesses. Clear? Okay, this is nothing but to bring those section of the people also into the financial inclusiveness circle, so that they will also be a part and parcel for their own upliftment, as well as they will be contributing to the Indian economy as well. Clear? So this Pradhan Mantri Mudra Yojana has been launched on 8th April 2015. Launching date is 8th April 2015 by our Prime Minister Narendra Modi. Okay, and in this year it is celebrating 10 glorified and successful years of its implementation. Okay, so which has stood as a huge success in empowering all these marginalized sections. Okay, let's see how. What is the main motto of this scheme is that, you know, Pradhan Mantri Mudra Yojana, it will be providing loans up to rupees 10 lakh. How much? Rupees 10 lakh will be provided as a loan amount to whom? To the non-corporate and non-farm or micro and small entrepreneurs or enterprises. Okay, so it will be providing loans, a loan amount of rupees 10 lakh to the non-corporate, okay, non-farm. They shouldn't do any business related to the farm, okay, and also small and micro enterprises. So 10 lakh loan is not a small amount to those sections of the people, okay, isn't that so? So this is a wonderful scheme for them. And now, what is the full form of Mudra? Let's see. Mudra stands for Micro Units Development and Refinance Agency. So it is nothing but the development and refinancing of the micro units, but not the larger units. Micro units are the small enterprises. Okay, it is a financial institution, okay, set up by the government of India. Okay, and now what is the aim of this? in order to provide financial inclusiveness, which we have talked about, and as well as providing support to all the marginalized and socio-economically neglected people of the Indian society. Okay, and next, this is the current development or the recent change. What is the recent change? Over here is that in order to strengthen the support for the aspiring entrepreneurs, the finance minister announced an increase in the loan limit to 20 lakhs during the union budget of 24 and 25 on July 23rd, 2024. Okay, and this will be coming into effect from October 31st, 2024. October 24, 2024, sorry. Okay, in the latest budget session of 2024 and 25, okay, the loan limit of this particular scheme has been increased from 10 lakhs to 20 lakhs from 2024 to 25. Okay, and this will be coming into effect from October 24, 2024. Okay, and now if you see the salient features of this act, Mudra Yojana, it is a refinance agency and not a direct lending institution. What is it? It is a refinance agency but not a direct lending institution. It will be refinancing. Okay, and it is registered as a company under the Companies Act 2013. Okay, right now it has been registered under the Companies Act 2013 and now it is a company. Okay, and is categorized as non-banking finance institute. It is not a banking finance institute. Remember this. It is a non-banking finance institute. Okay, labeled by RBI. Okay, and now these loans, okay, where do the beneficiaries go in order to get their loans? They are supposed to go to the commercial banks, okay, and regional rural banks, small finance banks, MFIs and NBFCs, non-banking financial corporations. Okay, these are the agents or the mediators which will be providing the loan to the beneficiaries out of this PM Mudra Yojana. Okay, and the borrower can approach any of those mentioned institutions or else they can directly log into this, sign in into this particular website and apply online also, in online mode also. Okay, and now Mudra loan is extended for a variety of purposes. What is the purpose of giving this loan? Okay, this will be the beneficiary. Okay, can the Mudra loan is extended for a variety of purposes which provides income generation, okay, employment creation in manufacturing service, so in manufacturing service sector, okay, retail and agri-allied activities. Mudra loan is extended. Actually, what is the purpose of sanctioning this Mudra loan is in order to carry out business in these particular type of sectors. What are those sectors? Manufacturing sector, service sector, retail sector and agri-allied sectors. Okay, these are the only sectors in which that person can do business. Okay, in small and micro levels only. Okay, and now no need of collaterals. Here collaterals are nothing but the securities. Okay, in order to avail the loan, no need of giving or providing any security to the government. Generally, if we take loans from any of the private entities or the banks, we are supposed to give them some security from us in the form of property or in the form of gold, etc., which you know, right? So here the government itself stands as a security for the loan taker. Okay, through credit guarantee fund for micro units. Okay, this particular, okay, credit guarantee fund organization will only providing guarantee for all those persons who are taking loan out of this Mudra scheme. Okay, and now if we see the interest rate, deregulated with a 2% interest rate subvention on prompt repayment of Sishu loans under this Yojana for 12 months. For example, let's suppose if a person, okay, is very genuine in repaying the loan amount continuously for 12 months and that too under a special category known as Sishu loans, then the interest rate will be reduced to them to 2%. which is very, very less. Okay, and also a Mudra card will be provided to those to the loan availers. Okay, in order to facilitate them for the working capital arrangement in the form of overdraft facility to the borrower. See, what is the working capital expenditure? Generally, the expenditure incurred on the employees that are working in those established small units. All the expenditures will be taken care of this Mudra card only, like their salaries, okay, their maintenance, etc. will be taken care of this Mudra card. Clear? And now Mudra Mitra, what is it? It is a mobile phone application. Mudra Mitra is a mobile phone application. It is an app which guides the loan seeker to approach a banker in availing Mudra loan under Pradhan Mantri Mudra Yojana. Okay, so a person can download this Mudra app in his mobile phone, and based on its guidance he can directly go or seek the assistance for this loan in any of the eligible banks. Clear? So this is a very, very wonderful scheme. Now let's see what are the categories of the loans in Mudra. Okay, there are 4 categories provided. One is Tarun Plus, Tarun, Kishore and Sishu. Okay, these are the 4 slabs or the 4 levels in which loans are provided to the loan seekers. What are they? So in this Tarun Plus category, the loan will be, okay, the loan amount will be ranging from 10 lakh to 20 lakh. So this is the highest range. We are seeing in descending order. This is the highest range, so which is named as Tarun Plus, and in this loan amount will be from 10 to 20 lakhs. Okay, and Tarun loans, in this the range is between 5 lakhs to 10 lakhs. 5 to 10 lakhs. And next is the Kishore range, in which the loans will be ranging from rupees 50,000 to 5 lakhs. 50,000 to 5 lakhs. And finally, Sishu category, and in this category the loans will be the loan amount will be from only 50,000. Generally, for a person, based on their eligibility, these 4 kinds of loans will be provided to them. Okay, based on their eligibility and also based on their loan repaying capacity. Okay, and also they should be in a position to repay these loans. Okay, based on that, these 4 types of categories of loans will be there. Clear? And now, these are the 3 pillars of this Mudra Yojana. What are the 3 pillars? Banking the unbanked, securing the unsecured and funding the unfunded. Okay, these 3 aims will be achieved through this Mudra Yojana. And now if you see what are the achievements under this Mudra scheme, because it has been 10 years, right, since the establishment of this scheme. Okay, disbursement to the women entrepreneurs. Till now, how much loan amount has been disbursed based on these categories, on Tarun category, Sishu category and Kishore category. Under this Tarun category, 16% of women had been, have taken the loan from this Mudra Yojana, and under the Sishu, 41% women have benefited from this Mudra Yojana, and under the Kishore, 43% women have benefited from this Mudra Yojana. Okay, highest number has been through Kishore scheme. Okay, remember this, these are the percentages. So which means we can say that it has been very, very successful in empowering the women. And now if we see to minority people, okay, these are the 3 categories and these are the percentages of the people that have been benefited out of this Mudra scheme. Okay, in Tarun, 60% of the people have been benefited, which is the highest category of the loan, and through Sishu, 41% people have been benefited, and through Kishore level, 43% of minority people have been benefited till now. Okay, so from this we can say that yes, Mudra Yojana has been very successful in achieving its vision of uplifting and empowering the marginalized section of the society. Clear? And now, finally, let's see Stand Up India scheme. What is this scheme? This scheme has been introduced in April 6th, 2016. Okay, so according to this scheme, the banks will be facilitating a loan amount of ranging from rupees 10 lakh to 1 crore. To whom? To SCs, STs and women. These are the three category of people to whom loan amount of 10 lakhs to 1 crore will be made available. Okay. So in case this enterprise may be in manufacturing, okay, services, they can establish their businesses in manufacturing sector, service sector, agriculture elite sector, or the trading sector. These are the eligible sectors in which they can perform the business, establish their own businesses. Okay. In case of non-individual persons, or in case any shareholders coming together in order to establish any of the enterprise, in that case the condition should be that 51% of the share should be in any one of these category of people. Okay. So it is only then they will be, that particular company or the corporation will be eligible for this Stand Up India scheme. Okay, 50% of the shareholding should be from any one of these three category of people. Clear? And now, these are the main objectives at a glance of Stand Up India scheme. Eligibility, SC, ST and women entrepreneurs above the age of 18 years. Okay. And borrower should not be a defaulter. They should not be a defaulter. That means, you know, they shouldn't have any pending EMIs of the previous loans. If that is the case, they are not eligible for this scheme. Okay. And nature of the loan, it is a composite loan ranging from 10 lakh to 1 crore. Okay. Through scheduled commercial banks. Who will be giving loans? Scheduled commercial banks will be giving loans to them. What is the purpose of this loan? To set up new enterprise. In where? In manufacturing sector, service sector, agri-allied sector activities, okay, or trading. By whom? SC, ST and women entrepreneurs, okay. And size of the loan covers 85% of the project, both term loan as well as working capital by the government itself, okay. 85% of the capital will be covered, and if the borrower's contribution plus scheme support will be exceeding 15% of the project cost, this rule doesn't apply. So it seems that in this condition the government will think that person is capable of bearing all the costs, and that is why, you know, the government doesn't bear 85% cost of this, but it will reduce its bearing cost. As simple as that. Okay. And now interest rate. Lowest applicable, generally government schemes will be providing lowest interest rates. Okay. And this should not exceed 3%. Which is highly affordable for them, isn't that so? And now the security. So the primary security required by the loan seeker plus collateral or credit guarantee fund scheme for Stand Up India loans as per the bank's decision. Okay. Sometimes, you know, banks, they will be coming forward in order to give the collateral support to the loan seekers as well. Okay. Repayment. The loan should be repaid within a span of 7 years. Okay. And 18 months of moratorium period will be granted to them. Moratorium period means that is a period in which, if in case, let's suppose a loan seeker is not in a condition to repay EMIs, then he can go for this option of moratorium, in which he can apply or request the bank to give him certain period, okay, stand still or the freezing period till his condition will be economically normal in order to pay back. So that is said to be the moratorium period. Okay, that moratorium period will be given. That moratorium period will also be given, and that span is 18 months. Okay. And now working capital up to rupees 10 lakh will be provided through a RuPay debit card, and also above, if it is above 10 lakhs, cash credit limit will be given to the entrepreneur. Clear? And now margin money, up to 15% margin money will be provided with them, and also with the support of the central and the state schemes. Clear? Okay. And now, so these are the objectives, and here one more important point to be noted here is that this loan will be given only to the greenfield enterprises. Okay, greenfield enterprises means this should be a fresh venture or a company. Okay, these loans will not be eligible to the already established companies, but will be eligible only to the freshly about to establish companies only. So that is said to be the greenfield enterprise. Okay. And now, why? What is the need for the introduction of this scheme? As we also know, this scheme has come forward in recognizing all the challenges that are being faced by the most vulnerable and marginalized section of the society, SC, ST and women. Okay, so the government has recognized the challenges they are facing. So, and as a solution for those challenges, government has come up with this particular scheme, okay, Stand Up India. And now the scheme, therefore, what is the main aim or the target of this scheme? It will be endeavoring to create ecosystem, okay, which facilitates and continues to provide a supportive environment for doing business for these marginal sections, okay. The scheme seeks to give access to loans from bank branches to the borrowers to help them set up their own enterprises. Very, very important. Okay. And now eligibility. We have seen, right, all the objectives then and there itself. These are the all objectives which have given in detail for you people, so that you shouldn't miss even a single point over there. Okay, now let's see the changes made to the scheme. First, what is the change? The extent of margin money to be brought by the borrower has been reduced from 25 to 15%. Okay. Of the project cost from the year 21-22. In the year 21 and 22, some changes have been made to the scheme. So, in which the government has reduced its capacity from giving 25% to 15% of the project cost. This is one of the important significant change which you are supposed to remember. But however, the borrower will continue to contribute to at least 10% of the project cost. The borrower, if I am a borrower, I am supposed to bear at least 10% of my project cost, and the remaining will be borne by the government. Okay. And now, loans for enterprises in activities that are allied with agriculture, and here agriculture allied activities will also be given loan, isn't that so? So what are those agricultural allied activities? For example, pisciculture, that is fish culture, okay, aquaculture, beekeeping, poultry, livestock, okay, livestock rearing, grading, sorting, aggregation of agro industries, okay, dairy, fishery, food, agro processing, etc. These are some of the sectors which come under agri-allied businesses sectors, okay. So the loan will be provided to these kind of sectors also, okay, and these also shall be eligible under these are also brought into the umbrella of this scheme. Previously they were not, but recently itself these agricultural allied activities are also brought under the umbrella of this Stand Up India. Remember this also. This is also one more significant change over here, okay. Now with this, the government, it is ready to give hand-holding support to all those marginalized sections, okay, by extending collateral free coverage. What is the helping hand given by the government? By giving security to the loan seeker, okay. Government of India has set up, for this it has set up an organization called as Credit Guarantee Fund for Stand Up India. So under this fund, there is an assurance of the guarantee of the credit for the loan seekers, okay. It will be also providing the convergence with the central and the state government schemes, and this is the portal into which the beneficiaries are supposed to log in, and finally under its guidance they can, even in online also, can apply for the loan under this Stand Up India scheme, okay. And now if you see the achievements, these are the statistical data. It has seen a huge achievement, and these are according to March 2025. These statistics are according to March 2025, okay. So the total amount sanctioned, okay, it has been increased from 14,431 crore from October 2018 to 61,000 crore by 17th March 2025. See, 14 to, let's say, it has been increased from 61 crore. Within a span of 6 years itself, the amount sanctioned, the total amount sanctioned has been increased from 14 crore on rough basis to 61 crore, which is a very huge success, okay. So in this, if we go to category wise of SCs, ST and women. These are the three categories which I have given separately also. Please do remember the statistics. When it comes to SCs, you know, they have been sanctioned. Their sanctions have been increased from 1826 to 9,747 crore, which is a huge leap. Okay, this is all within a span of 6 years. And for ST, the amount has been increased from 575 crore to 3,244 crore. 500 to 3,000, not a small amount. When it comes to women, you know, their range has been increased from their sanction amount. Sanction amount has been enhanced from 12,000 to 43,000. Which is again a very, very huge increase. Okay, from this we can say that yes, this particular Stand Up India scheme has stood as a great success in benefiting or empowering all these marginalized sections of the people. Okay, which is very, very important for you people. Okay, this is the diagrammatic representation which I have given, and from this I hope this session will be very, very useful, and tomorrow we'll be talking about the remaining schemes of this. If you're having any doubts or any suggestions, please do drop all of yours in the comment section below, and also subscribe to Vishnu IAS Academy. Okay, I wish you all the best. Bye.